Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. And in today's video, we are going to discuss the stock market crashing last Thursday and Friday, and today being Monday, August 5th, 2024. Right now, the futures are actually pointing up, which is not surprising. I mean, the market got crushed 3 days in a row. At some point, it has to turn around, and that is the historical norm. We're going to discuss the economy in today's video at the most basic level, which covers Main Street, which I've done a lot of that. And, personally, I get frustrated because, nobody cares when it's Main Street, the everyday average American taking a beating. But, the second the stock market goes down, it's the end of the world. We're also going to discuss cryptocurrencies, Warren Buffett, the possibility of an emergency rate cut, the jobs report from last Friday, a multitude of stocks ranging from Apple to Amazon to Intel to Hershey to Starbucks to McDonald's, and what happens next and how to profit from it, whether it's gold, crypto, stocks, bonds, etc. If you're into economics, finance, making money and other things of that nature, please be sure to like, comment, and subscribe. And I do apologize. I should have done a video last week, and unfortunately one thing came up after another. So we're going to kind of rehash it. First and foremost, I'd like to point out that we're a consumer-based economy, right? America, I believe 63 or 67% of our economy, which is terrifying, is based on consumerism. And the fact that the consumer, the everyday American, is broke is a major issue. So I'd just like to cover a few points of that. And, in particular, touching on McDonald's. So McDonald's found out the hard way that their $20 value meals, which is not a value meal, it's overpriced, gross, disgusting food. It's, and I'm not even going to say what I'd like to say because I don't want to get sued. And I mean that with all due respect to people who do like it or do choose to eat it. But at the end of the day, so people don't want to go to McDonald's for $20 meals or $20 value meals, but they do want to go there for $5 value meals. They rolled it out as a test run. They decided they were going to do it for a month, and after a month, it was so successful that they're now going to extend it through the end of the year. So basically, the headline reads, cash-strapped consumers flock to McDonald's on $5 meal deal. And I did a whole video on this. You can go and watch it if you'd like. And what else is happening? Hershey's. I mean, Americans can't even afford chocolate anymore. Hershey's sales crater, and their guidance melts. No pun intended. Credit card and auto delinquencies soar. Americans panic search give back car. Walgreens, right? Which, again, it's an overpriced drugstore who sells overpriced crap, and, that's why they're going out of business. But they have 8,000 stores, and they plan on shutting down about 2,000 of them. That's a huge hit. And what's the reason? Worse than expected consumer environment. Pepsi warns U.S. snack demand subdued as consumer slowdown worsens. And again, so this is just stuff from Main Street. I'm going to move on to Wall Street. I'm going to discuss the stock market and everything else. But at the end of the day, we have to realize that, it's Main Street that makes America, unfortunately, Main Street has taken a beating due to high interest rates, which are not high enough. I'll get into that a little later. It's also due to, primarily, I hate to say it, inflation, and it's due to cheap interest rates and the printing of the money supply, which is the definition of inflation. But basically, that's it. The cost of everything, as we've had hyperinflation. Nobody wants to admit it. The government numbers are absolutely cooked, and everybody's happy as long as their home prices are going up, their 401k is going up. But when you have to actually dig into your 401k to survive, you're not that happy. Anyway, Bidenomics, business bankruptcies jump 34% in the first half of 2024. That alone, General Mills shares slide on dismal outlook amid consumer pullback. General Mills, who makes Cheerios, Lucky Charms, Yoplait, and Annie's, fruit roll-ups, Nature's Valley, Wheaties, Blue Buffalo, dog food, the list goes on and on. they're a major conglomerate and they're taking it on the chin. Same thing with Nestle's. They also reported a weak fourth quarter in 2023. Stellantis, who makes Grand Cherokee, Jeep Wrangler, Dodge Ram. Dodge Ram is one of the brand, whatever that, you know what I'm saying? They can't sell Jeeps anymore. Ford crashed 20% in a day, due to their terrible earnings. The used car and new car incentives are up 53%. So they're doing everything and anything that they can to sell new cars. Swatch shares crash most in 4 years as profit plunges on China downturn. They make Omega watches. And just a few other notes real quick. Pool shares plunge. Leslie Pool shares plunge because people aren't spending on pools, high ticket items anymore. Actually down 20% projected. And Polaris shares crash as high interest rates crush demand for ATVs and jet skis. So, I could go on and on, about the weak consumer, but I've done that in so many of my other videos that we're going to actually focus on what happened in the stock market today, what happened last week, and how to profit. So anyway, Monday Massacre brought to you by Kazoo's Carry Chaos. I do like this one. Kamalanomics. I guess we don't have Bidenomics anymore. We have Kamalanomics, which is just absolutely a terrifying thought. And, crypto got obliterated down to 50,000 today. So anyway, it started in Japan, although it really didn't start in Japan. Japan was basically playing catch down to the U.S. stock market last Thursday. And after last Thursday, we had the week jobs report, which came out, which will probably get revised lower, by the way, because that's what they've done for like the whole year now. Every month they revise the numbers down further, and nobody seems to care or take note or point it out or seem to want to even fix the error from occurring. You make the same mistake 12 times in a row, you should kind of fix it, right? But no, they don't. So anyway, Asian shares have been plummeting. Japan shares have been plummeting. And in the U.S., the narrative transitioned from soft landing to hard landing, stoked the flames of the sell-off, and some pointed to, dare I say, Kamala Harris taking over Trump in the lead for president. Today, right, I mean, this is just mind-blowing. At the worst, small caps and NASDAQ were down 6% today before dip buyers stepped in and lipsticked the pig of the day. By the close, all the majors were down around 3 to 3.5% on the day. What's your experience, by the way? I personally didn't want to even look at my portfolio. I know I thankfully have a good amount of cash sitting in my stock account. I personally use E-Trade, but what are your thoughts? What are you doing? I'm gonna hope the market crashes more, and I'm gonna look to buy deals. And thankfully, I have a good amount of dividend-paying stocks, and if they go down further, I plan on buying more and having it reinvested. The S&P 500 broke below its 100 moving day average. The NASDAQ broke below its 200 daily moving average, but it found support there. The Mag 7 stocks are now down a stunning $3 trillion from their record highs. And, listen, if you go to Open Insider, you can see, NVIDIA CEO just selling hundreds of millions of dollars of stock. Facebook, same thing. The list goes on and on and on. Speaking of NVIDIA, it's down 35% from its record high. So, obviously he knew what he was doing. The AI trade is breaking below its 200 daily moving average, and the VIX, right? This is what's absolutely scary to me. On July 23rd, it was $14 for the VIX, and today it ran up to $65, and it closed at 35. But if somebody took some call options on the VIX, they're very wealthy right now, and kudos to them. What else? The Treasury market was chaotic today. Yields collapsed by almost 20 basis points twice intraday. The dollar dropped again, going back down to midday lows. Crude plunged to test lows since February at $71 a handle. Crude should break out. It should be going higher. I mean, we're on the verge of World War III. And gold was, hit too. It was $2,400. It went below before finding support. Eventually, gold stocks, in my opinion, will decouple from the stock market, and they're going to have a meteoric rise, due to the massive amount of inflation. And the Federal Reserve is stuck between a rock and a hard place, because if they lower rates like they want to, they're going to cause massive inflation. And, their goal is to stimulate the economy by having lower interest rates, and people borrow more. And then what happens? And they spend more. But people are broke and they can't afford to even take on any more debt. And what else? Crypto markets were clubbed like a baby seal overnight. It went down below 50,000 for the first time since February, basically erasing all of the ETF gains, but it bounced back. Crypto is very volatile. I'm not going to say my thoughts on it, but basically everything got destroyed today. And, the Federal Reserve may have an emergency meeting. They may not. They might decide to cut interest rates by 50 basis points, but not for nothing, it's not going to really do a whole lot. And the other issue is inflation is not under control. Anyway, moving along, did Warren Buffett call the top? He sold half of his stock in Apple. He also sold a ton of Bank of America stock. The guy is 93 years old. He's been doing this longer than most people are alive. And, he knows the top when he sees it. So he sold $75 billion approximately worth of the stock of Apple. What else happened last week? Amazon got absolutely crushed, and they reported weaker than expected revenue for the second quarter and issued a disappointing forecast for the current period. And what was the primary driver of that? So advertising was actually down. And what is advertising? That's for the consumers. So if consumers are down, advertising is going to be down. And, they're losing due to discount sites like Temu and Shine, which I've never even gone onto either of those websites. Hopefully I never have to. But, what they're really saying or really seeing is ASP and lower ASP in products. Meaning average sell-in price, right? So people are spending less and they're looking for better and better deals. And, to go a step further, at an event with Chinese seller in June, Amazon said it plans to launch a discount store that will feature mostly unbranded items below $20, according to presentation viewed by CNBC. So people, it's not that they want cheap stuff, it's that they can't afford it. And again, I can't emphasize enough. I've said it so many times. The economy is broken. The consumer is broke. Inflation is not going to go away. It's going to only get worse. Even if the Fed even if they don't, lower rates and they just keep it where it's at, inflation is going to come back. The government spending is absolutely out of control. I believe in June we spent $140 billion on U.S. debt interest. And the U.S. deficit just hit $35 trillion. This is absolutely mind-blowing. Anyway, what else is going on? Small business job growth turns negative, first time since COVID lockdowns. ADP employment rate, report. And the unemployment rate is up, which I think scared a lot of people. And, the stock market used to get bad news and it would look at it like it was good news because it meant the Fed is going to cut rates. Now, when we get bad news, it's actually bad news and the stock market goes down like it should. All right. Jeremy Siegel came out, who's from Wharton Business School, and said the Fed needs to make an emergency rate cut. With all due respect, Jeremy Siegel should be fired. He doesn't even know what inflation is. And again, we're going to have stagflation. We already do have stagflation, if not hyperinflation. And once the Fed cuts rates, it's coming back. So, other stocks of note, by the way, Intel cuts a whopping 15,000 jobs, posts 1.6 billion loss just months after getting Biden funds. And this really pisses me off, by the way. In March, President Joe Biden celebrated, this is just disgusting. He celebrated an agreement to provide Intel with up to $8.5 billion in direct funding and $11 billion in loans for computer chip plants around the country, talking up the investment in the political battleground state of Arizona and calling it its way of bringing the future back to America. At the time, CEO of Intel, Gelsinger, called the CHIPS Act the most critical industrial policy legislation since World War II. Listen, if somebody gave me $8.5 billion, I'd be calling it anything that sounded good. And if somebody lent me $11 billion, no less, which I'm sure is going to be at some cheap interest rate, of course it would be the greatest legislation ever. And, I pay a lot in taxes. I'm sure this guy, Gelsinger, pays a lot more than I do in taxes. But why are we giving American taxpayer dollars to these huge multi-billion-dollar conglomerate publicly traded companies? I mean, that just pisses me off beyond any words I could even attempt to nicely say here. And you know what? I'm glad. On Friday, August 2nd, 3 days ago, Intel shares plunged 22.6% in pre-market trading. Nvidia was down 4.4% as global chip stocks fall. And, it would be wrong for me not to mention the, commercial real estate crisis, for that matter. And you can do this one thing after another, but huge midtown office building, and this hasn't even begun to affect the regional banks. This is going to destroy, these regional banks. It's going to also destroy a lot of jobs. It's going to be a lot of bankruptcies, massive losses coming up. Huge midtown office building sells at auction for a 97% discount after receiving just one bid. So let's actually go through the numbers here. 1 million square foot midtown office building in Manhattan, half block glass tower at 135 West 50th Street, home of the 22 opened urban hawker Singapore style market in the ground level. So basically it was bought in 2006 for $332 million. It sold last week on Wednesday for $8.5 million. A million square feet in Manhattan just went for $8.5 million. Let that sink in. And, if that doesn't scare you, then I don't know. And, deals like this are going to be happening. Had I known that could have been picked up for $8.5 million, I don't know. Maybe I would have looked to have raised the money and bought it myself. You really, how are you going to go wrong if you have half of a brain on that deal? So anyway, the moral of the story here is things are going to get a lot worse. Federal Reserve can do whatever they want, and they're not going to be able to control it. Whoever we get in 2024 is going to be walking into a SHIT show, and their response is not going to be good, whether it's a Democrat or a Republican. It's just a matter of whose response is going to be less worse. And with that being said, I'd veer and venture to say that a Republican response would be less worse than a Democrat response. But unfortunately, however you want to cut it, it's not looking pretty. So what are your thoughts on that, by the way? And how do we profit? Well, I can tell you what I'm doing. I'm watching the price of gold. I'm watching the price of silver. If they go down enough, I will buy more gold stocks, and especially gold dividend yielding stocks and silver stocks and royalty companies and foreign stocks as well. I might also buy more precious metals. And, right now I've been just building up my cash reserve. and looking for investments that I know will make money come hell or high water, excuse my language, natural resources, stuff that we're going to need regardless of what happens. So anyway, if you found this informative or helpful, please be sure to like, comment, and subscribe. It means the world to me, and hope you have a great night. Thanks.